Good afternoon, traders. This is Damien here, making you another video to hopefully clarify the whole ABCD versus the AB equals CD. It's really quite simple, and I think we're all reading into it a little too much. The rules are basic and simple. So let's start right away by identifying where we start. We start with initial swing. We have a swing here, okay, that we identify here, and we draw a fib, from the low to the high to identify the first correction. Now this swing, it's either going to be X or it's going to be A, and that's going to be defined later by the swings that develop within this main swing. Okay, so now we have a correction here that goes into our targeted area. Okay, for a valid ABCD pattern, we want to see a retracement into this area. Okay, now that doesn't mean the price has to close in here. Okay, one of the qualifiers, the price has to achieve at least a 61.8, meaning we could have a tail come in here and price close down here, and that is still okay because we achieved a 61.8. We can also extend past a 78.6, but we cannot close above the 786. Okay, if we do that, then this ABCD pattern is not invalid, and we are looking for an AB equals CD. Now, in a traditional pattern, we look to replicate a harmonic move equal distance of this. Now, this makes it an ABCD pattern. Now, anywhere outside of this, if it retraces to here, then we're looking at an AB equals CD. If it retraces here, we're looking at an AB equals CD. These are harmonic expectations of a one-to-one harmonic move from the correction of an A to B swing. Does that clarify this? Now, anywhere in this, it conforms to our rules, and therefore it is a valid ABCD pattern. That's why I say that an AB equals CD is not a pattern, because we're measuring swings that are happening outside of our targeted area to qualify this as an ABCD. Okay, now there's some more work to be done here. Okay, as this, we said that this could be either XA, and this can be A or B. Okay, this can be A or B. Okay, depending on what happens here. Okay, so we have the first qualifier, and we have an XA, and we have this. This is also a qualifier for what? For a Gartley pattern, right? So we don't know if this is an X or it's an A. We don't know that yet. Okay, it's dependent on this swing right here. Okay, so what you would do is, once price breaks this low, it is 100% confirmed that this is an A, and this is B, and this is C. Until this low is broken, we cannot guarantee that for sure. Okay, we just have the first half of the pattern that is valid. Okay, because if this happens to retrace, if this happens to come to here, then what happens? We're looking at a Gartley pattern, and this is now X, A, B, C, with D being up here around the 786. Does that make sense? That's why I say that we don't know yet if it's an X or an A on some of the posts. Until we get that confirmation and price closes down here, we do not know that for sure. So let's assume that we know that this is an ABCD. Since we're talking about ABCDs, let's forget about the Gartley, and let's go back to our analysis here. Okay, so now the expectation is for D to be an equal extension of this. So what we do is we grab our extension tool, Fibonacci extensions, and we draw an extension of A to B downward. Okay, downward here. You can also, if you want to get try to find a little more confluence, a little more you can grab an inversion of this high and this low and project that downward, and you'll see that you have some confluence here of a 127, 138, 138, and 161 of these two swings, and you have the equal distance expectations to be in the zone. So now your reversal zone, your PRZ, becomes this area right here. Okay, so this is the area that you're going to target, okay, for a trade in the reversing direction. Now you're going against order flow. Okay, order flow is down, trend is down, you're taking a potential reversal here. Okay, so this reversal, that's why I take profit at the 61% of this pattern, because if it's not a complete reversal, price will find, ultimately should find, some kind of resistance in this and start trading back downward for a trend continuation move. Okay, so now that we established that this is D, we would take our swing high A to D, and say, okay, price is now trading reverse. It reversed as we expected. This is our break-even point right here. We bring stop loss to break-even. This is where we take profit. Okay, so our initial stop loss, okay, is the 161 of here. Okay, so there was a question as to risk reward, and that's why we use these ratios in this confluence area, because it offers the best risk reward possible. Now this will change depending on time frame. On a 1 hour time frame, the rules are written on a 1 hour time frame, you want to have that 10 pip below the 161, just to give yourself, you know, a spike or a broker, you know, stop hunting news, whatever it is. You want to have a stop loss below that point. So what we would do here is we would say, okay, well, here's our entry somewhere in this area. Here's 18 and 08 right here. That's 10 pips below. We're talking a 39 pip stop loss here, okay, for a potential just below. You know, price is not exact, so you got to give yourself a few pips below here for an 86 potential. Okay, and this will usually work out this way, and that's why these price reversal zones have been determined, you know, where they are with ratio confluence, because it offers a very good risk reward. You know, you're always going to be, you're usually going to be somewhere in the you know, risking making a double what you're risking usually, or at least 1.5. But if it's anywhere less than 1 to 1, you know, don't take the trade. It's not worth the risk. It's not worth jeopardizing your account over that. So this is how we approach an ABCD pattern. Also, let's cover the aggressive C sells very quickly. You know, price has to close within the zone, okay, to take that aggressive C sell. The reason why is because this is where your stop loss is the smallest. Okay, taking a trade here, your stop ideally would have to go up here. That's a lot of risk. What if price finds support here? What if you're trading into a Garley pattern? Okay, you are now, okay, stacking the odds against you. Price is going to find resistance at these levels. Price may dance around here a little bit. These are Fibonacci ratios, and price respects these. And here you have an area of support. You know, this could come up and come down here and reversed here. Okay, so that's why the aggressive C sell has to be up here and nowhere down here. It's more risk down here. Okay, but nonetheless, this is why we take the aggressive C sell here and nowhere else. Okay. But again, these are your rules. You would have to adapt them as your own, make whatever changes you deem necessary, but do not change anything unless you have done extensive testing and can validate what you are putting down on paper as a rule. Okay, it has to be repeatable, it has to be verifiable, and it has to be reproducible. Otherwise, you do not put it to paper. Okay, so I hope this clarifies the whole ABCD and why it's sometimes X and sometimes A. Until we have this final projection down and we get this clear break below, close below, we cannot confirm that this is a true ABCD pattern, or an AB equals CD, or an AB equals CD versus any other pattern, because, you know, if it traces down to the, if it traces retraces down here to the 50, we're looking at a back pattern. Okay, But you know, if price continues on downward past this point, then we know we're looking at an AB equals CD and not an ABCD, because price did not reach here. Okay, but if price, you know, comes down here, retraces to the 50, and then comes down and retraces down in here and comes back up, then we know we're looking at a bat pattern. So that is the difference between an AB equals CD versus an ABCD, and why we wait for that confirmation of the break below, close below, to confirm whatever it is. Okay, and that is how we invalidate patterns as well. Once these ratios, you know, breaks, you know, closes above or closes below, then you know that's where things change, and you look at what your next options are. Okay, whether it's another pattern or whether there's no pattern altogether. Okay, but that is why the ratios have been designed the way they have, and that's why the confluence areas are tight, to give you clear, precise signals and validation of patterns. I hope this video answers your questions. If it doesn't, please post your questions and I can make a better video, a more clear video. I am going to go ahead right now and erase these, and I'm going to show you a chart example. We're going to remove all these. We're going to move into price action, and as you see, we have here a swing. Okay, this is a main swing, guys. You know, price may have higher highs, higher lows. There is no higher high than this, and there is no lower low than this. This is a main swing. Doesn't matter what's happening before, after. We're looking at price in this area. This is the main swing. This is the dominant swing. There is no higher high. 100 people would have to agree, and 100 people would have to agree that there is no lower within this price section of this. That makes it a main swing. We don't have to go back and find an ultimate high and an ultimate low. There's no need to do that. That'll drive you crazy, as there will always be a higher high and a lower low. So that's it. Price retraced into this area here. Okay, price showed us now that this is an A, X or A, X or A or B, and so on and so forth. So price came up here, established our first leg of the pattern, potential pattern here. Price came up, came down, retested this area. We did not get a break above, close above. Okay, so this still holds, and even if it was to close above, it doesn't matter. It's within our zone, which is right here. That would still be valid. Okay, this gives you an opportunity for an aggressive C sell position if you would have taken it. Maybe not, I don't know. You would have to drop down in time frame here to identify this little area, just like a price reversal zone, see what price action is like, to determine that. Maybe we can cover that in a video down the line. I just don't want to get this video, I don't want it to get too long. Okay, and then we have our expected projections down into the price reversal zone. We go ahead and extend our extensions from the high to the low. Okay, and we see, and if you want to get a little fancier, you can get yourself an extension of this for some added confluence. Okay, and we can now say that this is our expected reversal zone. Okay, that is our expected reversal zone. As you can see, price came right into that area. Price had an immediate reaction and rejected the area. Okay, ideally you may want to also see if there is any structure associated with your price reversal zone, and as you can see, it worked out very nicely. Some added confluence there. So now we take our, we're going to remove all our fibs here, and we can draw one just to make things easy. We can say, okay, so we're in long here, break even, target one. Just before that, it would have hit beautifully. Okay, so this one trade, you know, produced somewhere around 60 pips. and the risk was probably somewhere, you know, close to 30, more or less, give or take a few. But that is, you know, how we look at this. This is how we trade this. They're not all going to be winners, but with the risk reward how we have, we can have, you know, we can usually have 3 losers and 1 winner, and the 1 winner will erase the 3 losers. You know, but these patterns are fairly accurate. They work out very well, and this is why I was saying, you know, why you want to take profit here, because, you know, we got to expect in a downtrend that there is a trend continuation, and the trend continuation will usually find resistance here at the 618 of the pattern completion for continuation downward. In this case, it didn't happen. It was a retest of the low in this area of support, and price came back around. But that is how you handle this. Again, I hope this helped, and post your questions, and we will either answer them or make additional videos. Thank you very much.